Ladies and gentlemen, good day and welcome to the conference call to discuss VGuard Industries' acquisition of Sunflame Enterprises, hosted by InCred Equities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Agarwal from InCred Equities. Thank you, and over to you, sir.
Thanks, Stephen, and good evening, ladies and gentlemen. InCred Equities is pleased to host this call for VGuard Industries to discuss the acquisition of Sunflame Enterprises. We have with us the senior management of VGuard Industries, led by Mithun, Managing Director of the company, Mr. Ramchandran, the Chief Operating Officer, and Mr. Sudarshan Kasturi, the Chief Financial Officer for VGuard. We thank the management and the investor relations team for the continuous support and giving us this opportunity to hold the call. I now hand over to Mithun to share his brief thoughts on the proposed acquisition, after which management would be happy to take questions. Over to you, Mithun.
Thank you, Rahul and InCred for hosting this call. A very warm welcome to everyone present for this call. I trust all of you had a chance to refer to our press release, which was sent out on Friday. We have signed definitive agreements to acquire a 100% stake in Sunflame Enterprises Private Limited for a consideration of 660 crore. This will be on a debt-free and cash-free basis, subject to customary closing adjustments. We expect this transaction to close by the middle of January 2023. This acquisition, once completed, will significantly enhance VGuard's presence in the kitchen appliances segment. Sunflame is a well-established pan-Indian brand with a wide portfolio and strong product development capabilities. We plan to finance the transaction through a mix of internal accruals and debt. We strongly believe that this acquisition is highly complementary to VGuard. There are multiple levers for unlocking synergies in areas like geography, product portfolio, and trade channels. Further, the recently established integrated manufacturing facility of Sunflame will enable significant scale-up of the overall kitchen portfolio. The acquisition is a key milestone in VGuard's journey to build deeper engagement with our consumers. We believe that this will be value accretive to the shareholders of VGuard. With that, I conclude my opening comments and would like to thank the team at InCred and Rahul Agarwal for hosting this call, and would like to request the moderator to open the floor for Q&A. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Gajare from Haitong Securities India Private Limited. Please go ahead.
Hi, Mithun. Congratulations on this acquisition. I've got a couple of questions. I'll just start with the breakup of. You did indicate, you're looking at internal accrual and debt. Could you give us some sense on what is the kind of debt that you're looking at? And you already tied up the debt or cost of debt, etc. So that's the first question.
Okay. Sudarshan, you want to answer the first part regarding debt?
Yeah, we are looking at a debt of about 350 to 400 crores, and the balance will be from internal accruals. We have not tied up yet. We're just speaking to a few people. We should be finalizing in a few days.
The indicative cost, I think, Sudarshan, we have not yet tied it up, but...
No, we have not tied up, so I didn't want to put that number. So we'll discuss that once we have tied it up. Yeah.
My second question is, with revenue of almost 350 crore rupees that the company has done last year, Could you give us a sense of the breakup coming from north, south, east, west? The regional breakup of this 350, and also, what was the margin last year? Because I think you did talk about the profit margin, you didn't talk about the EBITDA margin, and how the company has done in the first half of this year. So on the financials.
Okay. So I think the south to non-south split for Sunflame is roughly 80 to 20. That means 80 coming from non-south and about 20% coming from south. Roughly the split. As far as the EBITDA number is concerned, I think it's around 12 to 13%. Sudarshan?
Yeah, it's 12% EBITDA. Right.
12%.
And how has the performance been in the first half of this year?
I don't think we will be able to answer that, But what I can say is that we have been, in talks with the promoters of this company for the last 5 to 6 years. So we have seen this company up close, with fairly granular level up close, and I can tell you that it's fairly consistent. So it has probably got one of the strongest cash flows that we have seen in the industry. The business is managed in a very steady and safe manner, and that's what I can say. So I think that even this year they will have a reasonable growth. Yeah.
So because I was looking at the last 10 years of growth, we've seen about 6-7% revenue growth in the last maybe 8-9 years, right from 2012. And I think even at the bottom line, I think that number was hovering around, I think about 5-6%. So the growth has been muted. So I actually wanted to understand, is there a reason why the company was not able to grow in the last couple of years?
So I think there are a couple of reasons. Without going into too much detail, I can tell you that the company is under-indexed in e-commerce and modern trade channels, and these two channels today contribute roughly 25 to 40% of the revenue of a category, depending on which category you take. And the promoters had not decided to participate in this channel for various reasons of margin, for cash flows, etc. So they have suffered in that sense. But in the growth in the GT has been according to what the market has grown, which has also been in the same level as you indicated. Ram, anything you want to add on this?
No, I think mainly if you look at the last 6 to 7 years, the organized retail has significantly expanded. It's now more than half the market, but they are extremely under-indexed. So they have not been able to participate in this shift, and they've done so consciously. So the other thing is, their operating model is, by and large, their GT business is on cash. So that's the other part. In a hyper-competitive market, they are running the business on cash. Yeah.
So Sunflame operates on mostly cash and carry business. So one of the few industry players who do not offer credit to distributors. So you can understand the strength of the brand.
That is all. I'll just ask one last question before I go back to the queue. In terms of the total sales, how much is manufactured in-house for the company, and what does factory and Faridabad really bring to the table, and how much is outsourced? So you could just discuss something on the manufacturing side of it.
So I don't have the outsourced Sutavi produced products, but I can tell you the factory in Faridabad has been set up with an eye to substitute imports of chimney. Chimney is a very large part of their business, maybe the second large category of their sales. And that's one of the few facilities in India which actually manufactures chimney. Chimneys are mostly hobs. Sorry, not hobs, hoods. Hoods are generally imported into India from China and other countries. But we with Sunflame, we have an opportunity to manufacture, and they already started manufacturing, I'm told, chimneys in India.
Yeah. I believe the in-house manufacturer is about 55%.
55%?
Yeah.
55 or 65?
So mainly the major categories, right? Cooktops, gas cooktops, induction cooktops, and chimneys, what is mainly made in these factories. And that should be the most significant part of the business. I'm sure that's upwards of 70%, right? So these three categories. As far as chimney is concerned, this new facility, is very new, probably just over a year old. Chimney manufacturing has just commenced, and it is about 3 to 4 months old. Yeah. So I think the part of the chimney transition, that I think to fully transition.
Okay. Thank you very much. We'll get back to the queue.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Thank you. Good acquisition, Mithun. So I've maybe joined it a little late. If you could help us with the key categories which are contributing to the 3 crore revenue, that will be useful to start with.
So it's cooktops, cooktops in the sense of both on the counter cooktops and built-in cooktops, and chimney, and induction cooktops. So all types of cooktops and chimney will be roughly 60-70% of revenues.
It's a full platform. It's a full platform with a wide range of kitchen options. The dominant ones are these mentioned, but they have a complete range of kitchen, including built-in.
Okay. And what would be the contribution on each of these three subcategories?
Would not be having that readily with us, or we would not like to share at this stage. The business still belongs to the current promoters, right? So.
Could you help us with the geographical breakup? You mentioned modern trade and online contribution is low, but what is it currently?
I think 12% or something like that, e-com plus modern trade, maybe 12%, 10 to 12%. And whereas the market may be close to 40-45%.
And the geographical breakup in terms of what was east, west, north, south, and what are the critical strengths of the channel?
So this is the brand is extremely strong in non-south. Non-south contributes roughly 80%, and south is about 20%.
Okay. And within, like we've been told, is it very significantly strong in west and north India?
And strong in north and west.
Correct.
North and western market is the bulk of the revenues.
Correct. And within these regions, it's true, because what we understand is they're strong more in the metro and the larger cities and not as strong in the rural side.
So I think, like we mentioned earlier, this is a company that does not give any credit to distributors, and yes, we don't have the exact data on what is rural and metro and all that. But yeah, chances are that they are more strong in cities because that's where the stronger distributors will lie, and they don't offer credit.
Okay. So, and correct me if I'm wrong, larger metro cities and especially west and north are not as strong for VGuard. So it seems like there is a complementary channel that we are getting. So how would we be able to leverage this channel and brand for some of the other kitchen categories, let's say for an example, mixer, grinder and juicer, etc., where we have the product categories already?
Yeah, so I think VGuard is extremely strong. VGuard is selling its kitchen products only in South India. We are hardly having any presence outside of South. We are mainly selling in South and across e-com channels. So in that sense, it's extremely complementary, where this company has good network in the northern and western markets. And VGuard is traditionally into electrical products and consumer durables. So we are present in the white goods channel and the electrical goods channel, whereas Sunflame is predominantly present in the kitchen channel. So kitchen channel is also different because it also includes vessel stores and all that, where VGuard is currently not present. So yes, in that sense, it's complementary.
Sure. And for us to actually scale up some of the just your thoughts, would we want to continue this brand? What is the kind of timeline we have got the Sunflame brand, and how do you want to leverage that?
Sorry, can you repeat the question?
So have you got the brand rights, Sunflame brand rights to perpetuity?
The brand is owned by the company. The brand is owned by the entity. It is not owned by the promoters. We intend to keep the brand separate. Ram, you want to add anything?
Yeah. So mainly, see, Sunflame is a highly reputed and well-known brand. It enjoys a very high top-of-mind awareness, and which is the fundamental reason why we have put this kind of money. So fundamentally the investment is towards the brand, not so much towards the the underlying business, right? So the brand has the strength. And of course, that's an integral part of the transaction. In terms of, so Sunflame will operate as an independent platform, and Sunflame will continue to operate as an independent platform. And it enjoys enormous opportunities to, scale up the business. I think, fundamentally, as we said, emerging channels are under-indexed, extremely under-indexed. Yeah. I think Sunflame is, although it enjoys very high levels of awareness, but I think from an availability standpoint, it is quite weak. So I think there is a good opportunity for Sunflame to grow south. So yes, I think these two brands and these two business systems will operate independently.
Okay. So what is the thought process? Because we were looking to grow in some of the categories like mixer grinders and some of the kitchen appliances. Would we now use the Sunflame brand for the kitchen and then keep VGuard for the electrical? So if you could just help us with what's the longer term thought process.
To put it in perspective, the combined VGuard and Sunflame business will cross something like 500 crores. So VGuard does about 140 crores and Sunflame does about 350 crores. We will independently continue to drive both the brands. And we will come out with the real correct strategy on what will be the brand architecture and price position segments in due course. But at the moment we are not planning to integrate it. It will be running as a separate team. So, but yes, there are some complementary. For example, there are certain products that Sunflame is selling where VGuard has the manufacturing capability and sourcing capability, and there are a lot of products where Sunflame is having manufacturing and sourcing capability where VGuard is selling. So we will use these, networks, but they will continue to operate independently as, independent brands.
Sure. Just last question from my side. In the agreement, do we have we cannot restructure the employees? Do we have to retain them? And if any of these clauses, if you could help us with.
Ram, you want to take this?
No, I think, as we said, right, so these are two separate, Sunflame operate as a subsidiary of VGuard, and it will operate with its business system. See, so what is, Sunflame is an extremely successful business, right? And generating, very strong cash flows and highly profitable, even on that, even on a scale of around 350 to 360 crores. Yeah. And it has its unique attributes and features, which contribute to making Sunflame and giving it the strength that it has in the market, right? And it is our desire to maintain and build on these strengths, right? And as these will be, independent entities, yeah, they will continue to operate the way they are operating, their side. Yeah.
So from our side, we are very keen to retain all the team members of Sunflame. There are roughly 300 to 350, employees in Sunflame. Our focus will be to retain all of them as much as possible because there is a lot of wealth of knowledge, product planning, product development capability in the company, which we would like to harness.
Sure. Thank you so much for taking my questions and best wishes.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good afternoon. Thank you for the opportunity. Congratulations for the acquisition. Couple of questions from my end. One was, if we look at the FY22 revenue, there was a substantial growth. Can you explain to us, because last 5 years was not much of a growth. while FY22 it saw a significant 20% plus kind of a growth. Is it possible to get some more color on FY22, the growth?
Some of FY21, I think they had a dip in revenue. So some of the, some of it is pent-up demand. Yeah. So I think maybe what we should look at is 5 to 6% growth from FY20 to FY22. I think FY22 shows a big growth because FY21 they had almost, because smaller companies had a bigger impact with COVID with the first, 3-4 months of not, operational.
Mithun, I think, the growth should be looked at over 20, 21 and 22 because, from March, 20, the COVID impact started. So 20, 21, 22, you should average and then look at the growth. It will then, that CAGR will be like what Mithun explained.
Understood. Secondly, I mean, you said that you're going to keep it as an independent entity. How do you look at the growth given where it is currently, given our, bandwidth? How do we look at growth? Can this be a 15-20%? Can this be more 10-15% for next 2-3 years at least?
Okay, so we don't want to give out any numbers, but I can say that with the kind of products they have, with the kind of brand recall it enjoys, with the kind of awareness and top of mind awareness, and with the kind of consumer base it has over the last 40 years, Sunflame, should be definitely much larger than what it is today, and that's our aim.
Right. Just to add on to the same point, where would you be required to make any investments further on the sales, distribution, branding, etc., to pick up that growth, trajectory?
I think, like we said, we don't want to give out any specific numbers, but yes, there is a lot of work to be done on the distribution side, because we do think that, Sunflame is not represented, adequately in certain geographies like South, partly in East. We also think that they are not properly indexed in the modern trade and e-commerce channels where VGuard has a good team running those type of channels. So there will be the initial low-hanging fruits that we will go after.
Understood. Just one clarification. You said that the distributor sales are cash and carry. Did I hear that right? So, yes. But if I look at the balance sheet, I see the debtor days somewhere between 50 to 60 days in the past.
Yes.
How do we explain that? Does that mean the non-distributor, the credit?
So I think Sunflame also has a CPC CSD business, canteen business, wherein which it gives credit. The general trade is on cash and carry, mostly on cash and carry. And I think Sunflame also used to supply to some modern trade outlets, but it's very small compared to the actual percentage of the market.
Right. What would be the CSD mix? Sorry, this is just the last question. Because the debtor days seem to be very large, non-distributor sales. The receivable days are very large. If you could clarify.
Ram?
Yeah, I think it's about between 20 to 27, 28%. I think the cash flows there can be variable. So sometimes if there are delays, then I think at that point in time, you could look at a picture at a point in time, maybe higher or lower. Also, they had some organized retail businesses also, in the past, which, they, because of their philosophy to maintain a profitable and fast cash flow business, so they have vacated some of those customers also. That's also one of the reasons why, if you look at that 3-year growth, it will be more like 5 to 6%.
Understood. Thank you. I'll come back in the queue again. Thank you.
Thank you. The next question is from the line of Ranjit Sivaram from Mahindra Mutual Fund. Please go ahead.
Yeah. Hi, sir.
So if you can take the phone off speaker, please. There's a lot of background noise that we can hear.
Yeah. Is it fine now?
No, sir. It's still the same.
Okay. Yeah. Is it fine now?
Yes, sir. So seems like we lost the connection for Ranjit. We'll move to the next question from the line of Nirav Vasa from Anand Rathi. Please go ahead.
Hello, sir.
Mr. Vasa, sorry to interrupt. Your voice is breaking up, sir. May we request you to move to a better reception area, please?
Is it clear now?
So still breaking.
Hello, is it clear now?
Yeah, now it's fine.
Yeah. So, I want revenue. FY22 revenue.
Sorry, sir, it's breaking up once again.
Can't hear the question.
Hello.
No, sir. So maybe request you to rejoin the queue, please. So once you get a better reception area.
Hello.
We move to the next question from the line of Khadija Mantri from Sharekhan. Please go ahead.
Hello.
Yes, ma'am. Please proceed.
Yes, please.
Sir, I understand that we would be raising debt of about 450 crores for funding the acquisition. So could you just tell us how the debt will be raised and what would be the interest rate for the same?
Sorry, what was your first part of the question? I heard the interest rate.
So we would be raising debt of about 450 crores, 400 to 450 crores for funding the acquisition, as per my understanding. Right. So what would be the interest rate that we would be incurring for the same?
We are still negotiating terms, so don't want to put out a specific number. So it might come in the way of the negotiations. Yeah.
Okay, sir. So, but the rest of it could be funded by internal accruals. I understand we have cash and investment of about 150 crores, so that should be sufficient.
Yes, the cash balance has gone up since the last reporting. Yeah. The balance, approximately 400 crores will come from debt and balance from internal accruals.
Okay. And sir, in consumer durables, so kitchen appliances, we have 140 to 150 crores of revenues. But are these products profitable? If we exclude fans and water heaters, then the rest of the kitchen appliances, are we making operating profit on these?
Yes, the kitchen appliances, the gross margin is good. Even EBITDA is positive, but EBITDA is low. It's a question of scale. But even within our portfolio, at the 150 crores, the gross margins are still good.
Okay, sir. Yeah, that's all from my side. Thank you.
Yeah.
Thank you. The next question is from the line of Rahul Agarwal from InCred Equities. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations to the team for the acquisition. Sir, about 2-3 questions. Firstly, on the distribution channel and service network of Sunflame, could you explain how the company is structured in terms of, distributors, dealers, retail touch points, what's the reach like for the company right now?
Yeah. Ram, you want to take this?
Yeah, I think I would like to avoid discussing too much in detail because the promoters will manage that business. It's not our business at this stage, and it's not fair for us to comment on that. But yeah, I mean, their business model is comparable. I mean, the GT business is distributors and dealers. Yeah. And they are probably, somewhere in the region of around, 10 to 15,000 touch points in the country. Yeah. I hope that would suffice.
Got it, sir. Secondly, question to Mithun, essentially on the ROI of the acquisition. Assuming that, VGuard always has been very careful on the return on investment and the ROC has been broadly ranging upwards of 20%. Mithun, any thoughts? How would you rate this 660 crore investment? How would you get up to 15-20% return on the capital here?
I think we are fairly confident of getting there. So we are quite confident. So otherwise we would have not, gone for it.
Okay, got it. And thirdly, on this, the balance 25 crore payment to be paid after 2 years, what could be a reason for this?
No, it's basically escrow. So, it's basically the escrow amount, and the promoters, felt it was okay that to leave the cash back with us rather than, in a bank.
So essentially, we pay the entire 660 crores, and of that, 25 crores stays in escrow.
No. Ram, you want to explain?
Yeah. So typically what happens is, after the acquisition is done, there are sometimes some adjustments that happen, once the, post-closure, data is available. Yeah. And there may be, some adjustments may come because of indemnities and all that. And there typically in any transaction, some amount of money is set aside in an escrow. In this case, I think the promoters of the entity have felt that it is it is better to leave this 25 crores behind with us rather than have to put it in a bank and maintain an escrow. So I think that's the background to this. So this 25 crores will be paid to them at the end of 2 years. This is normal and customary in every transaction. Yeah.
Got it.
Vary from transaction to transaction based on the comfort between the two parties. In this case, this is the number in our.
Got it, sir. And lastly, assuming some kind of 7-8% final closure on the debt to be taken of about 400 crores, would you agree fiscal 24 would be EPS accretive? Because my sense is the EBITDA is similar range, about 40 crores, and you would also lose some interest on your cash. So how do you look at fiscal 24 on EPS level?
First year will at least be EPS neutral, if not accretive. But year 2 onwards, it will be.
Okay, got that. Thank you so much for answering my questions. I'll come back in the queue.
Thank you. The next question is from the line of Naveen Trivedi from HDFC. Please go ahead.
Yeah, hi, congratulations for the deal. A couple of questions from my side. I just need to understand one, considering the South contributes around 60-70 crore revenue for the business. If you can highlight one, how has been the market share for the brand in the non-South market? And considering you have been following the brand since last 4-5 years, any particular challenges in the South side, if you can also highlight?
Yeah, I think Sunflame as a brand started out from Delhi. The promoter for any company that starts out from Delhi, North will be the largest market. So it's not surprising that, South is, market share is low or, maybe because they got into South late or there is more competition in South from locally present brands like Preeti, Butterfly and all that. So it's not a big surprise that it happens. It happens. It always happens like that. We don't want to comment on any market share and all that. I mean, I can tell you that overall as a business, last 4-5 years, it has been fairly stable. Yes, it has not grown as fast as some of the other kitchen players, but it has probably demonstrated better and predictable cash flow than, any other company I've seen.
Sure. So do you think that the brand requires a more innovation side, more sort of a drive, or you think that the pricing strategy should also be correct to attract more basically more attraction in the South side?
These are all very premature questions at this stage, like Ram mentioned, for another month at least it still belongs to the promoter family. So they will continue to run it. Once we take over and once we analyze and we will put a management team in place and, we will, hire our, advisors and we'll come back with what should be the strategy on how to scale up. And once we crystallize it, we'll come back to you because it's very premature, sitting here and deciding, what to be done, how to grow. But we are very confident that the brand has the strength to grow and that part we are very confident. How to do it, we will come back,
Sure. Just last question, any ad spend, sort of a number if you can share?
Ad spend?
Yeah.
It's about, I think, 5 to 6%, Ram. Am I correct?
Yes.
5 to 6% is the ad spend.
Yeah, thank you so much from my side and all the best, sir.
Thank you.
Thank you. The next question is from the line of Ranjit Sivaram from Mahindra Mutual Fund. Please go ahead.
We still can't hear you.
Sir, we lost his connection once again. We'll move to the next question from the line of Nirav Vasa from Anrati. Please go ahead.
Hello, is my voice clear now?
Yes, sir. Please proceed.
Yeah. Sir, with regards to the revenue booking of 350 crore rupees versus, because what I was seeing is that historically the average run rate was around 250 crore rupees. And last year we had seen unprecedented commodity inflation. So what percentage of this 350 crores revenue would you attribute to higher commodity price and growth?
I think the price growth for that particular year was between 6 to 8%, if I'm not mistaken. Ram, any?
Yeah.
Yeah, between
It's about 8%.
8%.
It's about 6 to 8%. Yeah.
See, I think the right way to understand this growth is 2020 March, I think, COVID had hit and, 20 March was not a normal for most companies. So, and 21 was a disturbed year, right? So that's why 22 is looking a very big year. Just average it across all 3 years and you will find that it's a 5 to 6% growth.
Exactly, sir, because the number that I was seeing was coming to around 250 to 260 crores of revenue on an average for last 3 years. So on an average revenue of around 250 crores.
The exit number is correct, but the growth number you should divide across 3 years. The 360 will remain, it will not shrink. Okay. But what will happen is when you're looking at the growth, please look at it as, average the growth across 3 years.
I think, I think to FY20 to FY22, the CAGR is about 5 to 6% is what we can tell you. Yeah, that's how we should look at it. It's not 250 crore, it was above that. Because there were also other, so please also understand that it had other companies and other promoter-owned entities which were merged into Sunflame Enterprises only in the last year.
Right. So that is what brings me to my next question. Would it be possible to share some number or color on the related party transactions?
There is no related party transaction today because there's only one company. See, okay, Ram, you want to explain?
No, okay. The business was organized differently till a year back. Yeah. Right. So at the point where the business is being offered to us, I think, all of these have got consolidated progressively over the last 18 months. Yeah. So
what you are looking at 250 is a standalone number. It does not include some of the other promoter-owned entities which also carried out business.
Mm-hmm. And sir, what I was seeing on their website is that they are also present in FMEG as well. So in FMEG, they are present across some product categories like water heaters and other categories. So how do you intend to keep Sunflame brand in FMEG as well, or do you want to consolidate under VGuard only? Especially the FMEG part.
So Sunflame has its own customers and its own distributors, and there are customers and distributors willing to buy Sunflame water heaters and Sunflame fans. So like we said, we will continue all the product verticals of Sunflame. Now, sometime in the future, we may decide to ensure for better, profitability and sourcing, we may source the products through our factories where VGuard has a larger presence in fans and water heaters. So those are calls we will take going forward. But yes, those product lines will be maintained.
Right. So my final
it's not very large. I think it's only like it's not a very large, maybe
it's not significant. And I think, as we have said earlier, right, I think, we have acquired the Sunflame as a very strong platform in the kitchen space. Yeah? And, it will run as an independent entity and it will be driven by the management team which aren't there in Sunflame and, what will get added as the promoters move out. So this team will decide the future direction of the, this entity. Fundamentally, synergies will be leveraged. So if we have a better supply, cost, advantage, maybe, extending our supply chain to any of their product categories, then that will certainly be explored. Yeah.
So my final question is, based on the existing manufacturing capabilities that this company has, what is the maximum revenue that can be generated from it? Thank you.
I think they have they have adequate capacity to meet their growth objectives for the upcoming 3 to 4 years. This particular place has also got land for further expansion.
Sir, any number that if you can give, maybe with regard to some capacity that they have for capacity or something like that?
No, I know. I'm saying it's not material because see, the capacity in this industry is flexible, right? A lot of it is also assembly. And second thing is, they can run shifts also. They are running 2 shifts. They can go 3 shifts also. And there is space also there. So I'm just saying that, it's not materialized. Let me see if I have a specific capacity number with me. I may not read this.
No, given that we are not owners of the business yet, there's only limited amount of granular data we can give out at this stage. So we'll come back on these, once we have run the business for a couple of quarters.
Got it, sir. Thank you very much.
Yeah. So at that time, we may be able to disclose more. Okay.
Thank you. The next question is from the line of Ranjit Shivaram from Mahindra Mutual Fund. Please go ahead.
Yeah. Hi, sir. Sorry, my line got disconnected last time. Just wanted to, when I look at this Sunflame, it is having this 265 crore kind of a revenue for a long period of time, and suddenly last year it is come to 350 crores. So if you help us understand that, what were the categories that drove this 100 crore of incremental revenues, and what will be the percentage of revenues that come from the normal normal categories, and what were the additional categories which drove? Any color on this?
Yeah. Let me just explain. I had mentioned this to you earlier also. I think it's not the right way to look at it. Yeah. March of 2020, sales were not normal because of COVID. Yeah, I think after 20th or 15th, yeah, typically in most companies, 60% of the business to 70% of the business happens after 20th of the month. Okay. So that particular year number is not a correct number. 21 was also a disturbed year due to COVID. 22 is a year where they could get the full normal and proper and regular revenue. There is also an impact of increase in input cost. Okay, that's one thing. And the other thing is there were other entities, of the promoter family, which also used to do business in this space, right? And which has all got consolidated in the last year, which you see on the, which is the year that went by 22. So I think, please don't read too much into, these trends and numbers. Yeah. That's all I would say.
So I think if you look at a like-to-like basis, the CAGR would have been not more than 5 to 6% for the last 5 years.
And what is the percentage from this stove, which is, I think, the main product of Sunflame, of the top line?
I think hoods, hobs, chimneys, all put together is about 40-45%, I think.
Okay, and
sorry, let me complete this. Stoves, cooking range, inbuilt, chimneys, induction cooktops. So all cooking and chimneys, it's about 45 to 50%.
Okay, so the modern hot top, which I think the market share is 1 to 2% is what we understand. That will be what percent? The hot top, which is the modern which go inside there, what will be percentage?
No, I don't think we are carrying, that level of detailed information to share at this point in time, right?
But I think they have decent presence in inbuilt as well, not the numbers you mentioned. Yeah. That much we are sure.
Because as per what we understand, the reason for you to get into this will be like being a competitor to a Faber or a Elica, or it will be completely, we want to be a competitor to the TTK, Prestige or Butterflies of the world. If you can explain what was the thought process in buying this company.
Okay. Ram?
Yeah. So fundamentally, we got into the kitchen business somewhere around 2012-13, and it has taken us 7-8 years, with the progressive introduction of models to build about 150-160 crore business in kitchen that we have as we speak today, and which might grow by some 15-20% in the current year that we are talking about. So now, Sunflame, on the other hand, is a business which is extremely strong in non-South markets, and building position in non-South would take us a long period of time. Also, in kitchen, unlike in other categories, right, brand recall and brand connection with the consumer is a very critical driver. Thankfully, because of the heritage and history of VGuard in South, this was a lesser barrier thus far. So looking at, the time that would be required for us to build a market presence in non-South, we thought it is wiser to go for a platform so that, we can start to build a strong position in non-South markets also equally fast.
So I think Sunflame has strong position even in chimneys also. So it's not that it does compete only with the traditional kitchen players, but it also competes with inbuilt kitchen players.
They have a decent business in built-in and also in chimneys. Yes. Growing these categories will also require you to grow the let's say your own channel. You'll have to put in a lot of these cases you will have to expand on your own brand shop kind of network. So or invest in shop. So I think the promoters have been conservative. They have a fairly decent lineup in this space, and they do decent numbers, not as insignificant as you may have mentioned. Yeah. So that is there, but I think the primary reason that we are getting into is to speed and hasten our national presence in the kitchen category, and have access to a brand which has equity and heritage in the kitchen space.
Okay. And sir, lastly, if I can, what's the percentage done through online, or is it all offline for Sunflame?
Sorry?
What's the percentage of trade that goes through the online market, or is it all offline for Sunflame?
I think almost 90% is offline. 10% may be coming from e-com.
And any geography that you can share? What is their geography split?
No, we can't provide it at the moment.
Okay. Okay, sir. Thank you so much.
Thank you. The next question is from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah, thanks for taking my question. Couple of questions. First, just wanted to understand what was the motivation of the Australian promoters to kind of exit the business, considering that, as you mentioned, the business was really profitable, really good return ratios and cash flows. Any succession issues, anything of that sort?
See, this is still owned by the family. It is all sensitive matters, so we don't want to comment. But we can say that the founder, promoter is almost, I think almost close to 8 years of age. So that was what the primary reason was.
Got it. And secondly, sir, like you rightly mentioned, the business has been really profitable, and perhaps one of the reasons has been that they have not been as aggressive on the e-commerce side. But going forward, do you see that as you maybe expand the presence on the e-commerce side and maybe on the modern trade, you could maybe need to spend more on the ad spends and all those other kind of expenses, and maybe margins could...
I think doing business in the current environment where you have a very high, growth in e-commerce and modern trade requires different set of skills, which many small companies may not possess. But we are having a good platform and team of people to deal with these kind of businesses today, which they may not have. So in that sense, yes, once we take over, we will try and align and index the market shares like what the total market looks like, rather than what it is today.
Got it. Thank you.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Thank you for the opportunity once again. just one or couple of more questions. One is, given whatever you've said, is it fair to say that, there are plenty low-hanging fruits with respect to leveraging the e-com part? And given the operating leverage, could there be a possibility that this 12-13% can actually become 15-17% EBITDA margin on a sustained basis?
So I think, like Sudarshan mentioned earlier, we don't want to give this kind of statements. See, all we can say is that, let me put this in another perspective. When I saw the business and the number, pretty much the VGuard of 2006, 2007, which I joined after my studies and all that. So that is the first thing that it attracted, because the promoter's character is very similar to and the ethos and the culture is very similar to what we have. So that's all we can say at the moment. I don't want to talk about how much percentage of EBITDA it will make in the next year or year after that.
Got it. And just one more question, given this acquisition is kind of now already done, would you be open to more acquisitions, or you'll wait for first integrating this and then looking at more acquisitions? And B, I think in a passing remark you mentioned about certain ROCs or IRR on this investment. So if you could clarify on your thought process on the same as well. Thank you.
So we have done a projection on the combined ROC of the combined entity going forward, and we are confident that we can go back to the ROC of the company what it was before. We have to understand that we have about 300 crores of cash which is not earning anything today. In that sense, the combined ROC should look good. We may not look at anything big at the moment because we will be busy, expanding and putting a team in place to run Sunflame and then, get the synergies out. So at the moment, no, we are not looking at anything else.
Got it. Thank you. Wish you all the best.
Thank you. The next question is from the line of Rahul Gajare from Haitong Securities India Private Limited. Please go ahead.
Sir, you partly answered the question that I had, when the earlier participant asked about capacity constraints. And like you said, that about 50-60% of the production is manufactured locally or domestically in-house. So therefore, revenue should not, that should not be a factor of growth. Now, given, that we've seen a CAGR of about 5-6% for the last couple of years, that's the reason why I wanted to understand, how the first half performance has been. So any color, whether it is similar to FY21 levels or similar to FY20 current last year's numbers. Any sense on the first half performance?
See, okay, it's a private listed entity. I mean, it's a private entity, not a listed one, so they don't publish first half numbers. All we can say is that it's been a steady business over the years, and this year also will be somewhat similar.
Because this entire, the entire EPS accretiveness will be a function of the revenue growth, and that is the reason why I wanted to just look at that.
There is a limit to how much data we can give out at this stage because it's very premature. Okay. So, if you're looking at the EPS thing, just look at the PBT and the interest cost. It will be EPS neutral at worst in the first year.
Fair enough, sir. Thanks, sir. All from my side. Thanks and all the very best for this acquisition. Thank you.
Yeah.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Hitesh Tong from ICICI Direct. Please go ahead.
Thanks for the opportunity and congratulations, sir. Sir, I wanted to know what is the overall industry size in which Sunflame is operating. I wanted to know the industry size of cooktops and chimneys. If you can throw some ballpark numbers, sir, it will be very helpful.
I don't have the numbers of the specific categories with me. We don't have it at the moment. We'll have to get back on that.
Okay, sir. And sir, last question is, have we signed any kind of non-compete agreement with existing promoters or family members?
Yes, we have signed non-compete with them. Yes.
Okay, thank you. That's all from my side, sir. Thank you very much.
Thank you. The next question is from the line of Mukul Deshpande from DAM Capital. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah, thank you for the opportunity. My question is, what are the medium-term growth drivers in this kitchen appliances space, and how are we aiming to expand our market share with the help of Sunflame?
So like I said, there are geographical, complementary, there is, for example, VGuard is extremely strong in South, and we have a 140 crore, kitchen business in South. Sunflame, largely 80% of its sales come from non-South, extremely strong in North. VGuard has relatively low presence in the kitchen channel, and VGuard's kitchen business is primarily through, consumer durable retail outlets. Whereas for Sunflame, it comes from all types of kitchen channels, utensils channels, and, consumer durable, any trade outlet that sells, kitchen products. So in that sense, it is complementary. So there is a channel and geography complementary. Product-wise, Sunflame has a much broader range than VGuard. We have a very narrow range from where this revenue comes from. Sunflame has got much more broader kitchen range, which VGuard does not have. So there are complementary products, there are complementary channels and complementary geographies. We also have complementary supply chain, in the sense VGuard's kitchen supply chain may not be the most mature, whereas it is definitely better for Sunflame. So these are the low-hanging fruits we see where we can leverage each other's strength.
Okay. Thank you so much, sir.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Rahul Agarwal for closing comments. Over to you, sir.
Yeah, I think it was a good discussion. Thank you so much for letting us to host the call. Over to you, Mithun, for closing comments.
Yeah. Thank you, Rahul and InCred, for hosting this call, and thank you all for participation. Thank you.
Thank you.
Okay.
Ladies and gentlemen, on behalf of InCred Equities, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.